Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the special primary market focused edition because it's raining IPOs and the next IPO that you should be knowing more about is Unicommerce eSolutions IPO that's already open for subscription. It will remain open up until August of 8. Remember, it's an e-commerce enabled SaaS platform. The company offers a range of products, software products to help businesses efficiently manage their e-commerce operations after purchase. It's a 276 crore rupees IPO, a fully offer for sale IPO, and the company's fixed this price band of 102 to 108 rupees per share. And remember, on the first day itself, we did see a full subscription of the IPO already, with the retail portion booked over 10 times as well. Joining in to discuss more about the company, the vision going forward, the opportunities for investors and shareholders is now the top management of the company with us. Mr. Kapil Makhija, the MD and the CEO of Unicommerce Solutions, is now with us. Warm welcome to you, sir. And thank you so much for taking the time out. Congratulations for starting your journey with the Dalal Street by launching your IPO, and already it's got off to a good start. You're seeing already a substantial demand, especially from the retail investors at large. So a lot of our viewers would be really interested in knowing what exactly the business is and what are the opportunities that exist in this space. Very unique business is what you are catering to. So it'll be great to have you first explain to our viewers. You know, you're saying that you're a SaaS platform, but you're also talking about e-commerce, which is a completely different ball game. How do you marry the two, and what is the exact business that you do, sir?
Sure. First of all, thanks for having me here. I think, like you rightly pointed out, we are an e-commerce enablement SaaS platform. As an e-commerce consumer, when you order online, you see the website on which you're ordering something and the delivery boy that comes to your doorstep. Whatever happens in between that is what our software powers today. We are a fairly dominant player in the space and process nearly 800 million plus transactions annually through our platforms, which means roughly 2.1 million plus transactions get processed on a daily basis from our platform. We serve a diverse base of 3,500 plus clients across many sectors across varying scale. And it may seem that we work with a lot of digital first brands, but we work almost equally across digital first brands as well as traditionally offline brands. Our platforms or our software products power the likes of Mamaearth, Boat, Lenskart, as well as the likes of Fab India, Imami, Cello, and many other listed players as well. We are Our pricing model or business model is very simple. We charge basis the number of transactions that get processed from our platform. So for every item that goes out of a brand's warehouse to the customer, we charge a very nominal fee for that. And that's why, as the number of transactions in the country have grown and will continue to grow, we are inherently set up for success. Because like today we have seen India, roughly there are about 4 to 5 billion shipments that get processed annually in India. As opposed to that, if you compare that with China last year 150 billion shipments were processed, which means that there is a significant headroom for growth. We are 1/30th the size in terms of e-commerce shipments itself. As the number of transactions continue to grow, our revenue will continue to grow. So we are effectively an index of the e-commerce, Indian e-commerce ecosystem, because we process such a large portion of the volumes already. The other growth levers for our business, besides the transaction growth, is as we see more and more businesses that come online, we are seeing a flurry of new brand launches, new direct to consumer brand launches. Plus, we are seeing a lot of traditional brands coming online because e-commerce is now becoming a way of life for consumers. And many of these brands want to connect with the consumers in these new age channels. So besides the fact that number of transactions, there is significant headroom for growth. There are more and more brands that will come online, and that is why we will continue to sell. We already have a diverse base of 3,500 plus clients, but we'll continue to sell. In fact, our enterprise client base has nearly doubled in the last 2 years, and enterprise constitutes nearly 90% of our revenues. So in FY22, this base was about 470 clients, and now it has increased to about 800 clients. Besides these two growth vectors, the other factor is that we offer a fairly wide comprehensive product suite. Today, the e-commerce ecosystem has gotten very complex for brands. They have to sell on their website, they have to sell on marketplaces, they have to do quick commerce, they have to deal with many logistics players, fulfillment partners. So we stand for simplifying e-commerce selling, and we are shielding the brand from that complexity. And in that process, we are launching new products. Our vision is to become a one-stop shop for e-commerce enablement. So the third growth lever for us is launch of new products. Plus, we are expanding into new geographies as well. We are already present in 6 countries outside of India. So the four growth levers for us is transaction growth, number of customers growth, new products growth, plus new geography growth.
Okay, got it. So, Kapil, also help us understand. I think the one key thing that is behind the thought of most of the prospective investors is why just an OFS? And so, what is the aim of launching an IPO if you're not going to get any funds from this IPO at all? And of course, if you could tell us going forward from here, will there be any FPOs plan? Will there be any fundraise plans? Then, what is your funding position right now?
Sure. The business has been built on very strong fundamentals. We have been profitable since FY21. We generate significant cash flows year on year, every month, every year. We generate free cash flows in the business. We are sitting on as of FY24. We have a cash balance on our bank balance sheet of nearly 70 crores. So there is significant cash already available. So at this point, there does not seem the need of us raising cash. But going forward, if there is a need, uh, as I said, our vision is to become a one-stop shop for e-commerce enablement, and our aim is to offer more and more products to the ecosystem. We may choose to build some of these products ourselves. Some of them we will also do inorganically through acquisitions. So some of that cash would be utilized for inorganic acquisitions as well. And for that, if we feel the need, we may come back. But as of now, we feel fairly comfortable because the good part about this business is a significant operating leverage in the business. In the last year, if you see, our revenues grew 15% because it was one of the slowest years of e-commerce that I have personally seen. But in the same time, our PAT nearly doubled, and that's the power of a SaaS platform. We operate in a very high gross margin industry. Because of that, a large portion of revenue growth translates to our bottom line. That's why we will continue to grow strongly because of the four levers that I mentioned. We will see a significant improvement in profitability as well. And given that the business inherently has strong operating leverage, we do not feel the need of raising primary at this point of time.
Right. So, Kapil, just help me, what is the kind of growth trajectory that you see for the industry vis-a-vis you? The companies maintain that you're growing faster than the industry, but previously you've had levers like, say, COVID, when it was like a boom period, when you actually
Yeah.
grew much faster. The industry also gave you that opportunity. But going forward from here, of course, you're saying e-commerce is the thing that is growing right now. What is the kind
Yeah.
of levers that you would have? What is the, sustainable growth rate that you will have, both on the top line as well as on the margin level? If you can explain to us what's the outlook there.
Sure. So we have always, as you rightly pointed out, we have always grown faster than the market. During the pandemic, obviously, e-commerce accelerated. It helped us becoming a way of life. At that time, the market grew as per our estimates, grew at about 30-35%. We delivered a 50% growth as a company. Last year, as I mentioned, it was arguably the slowest year that I have also seen on my 9-year journey. The market, as per our estimates, grew at late single digits. And at that time, also, we delivered a 15% growth. Given the facts that I mentioned, right, the e-commerce as city dwellers, we may seem that e-commerce has arrived and there's not much headroom for growth. But as I mentioned, in China is already 30x the size that India is today. So there is significant headroom for growth. We fundamentally believe that in the long term, e-commerce will continue to grow at a 25% sort of a CAGR. And given that we have always delivered growth more than this, we are hopeful that we'll continue to do that as well. There may be some soft years, like FY24 was a soft year for e-commerce. In FY25 also, we are seeing some improvement, but it's too early for us to say whether it has come back to the trajectory or the trajectory for the e-commerce market has improved. But fundamentally, long term, we believe that e-commerce will continue to grow at a
Right.
25%. And
The other thing that I want to also know, Kapil, is what is the kind of competitive intensity that you're facing in this industry right now? Is there a huge competition out there with similar companies looking to cater to e-commerce companies and players like you? And do you have to scout for market share right now? Or are you at a comfortable level, and where do you see that going forward?
Yeah. So, see, every industry has competition, but the good part for us is we are a fairly dominant player in our industry. We are the largest player by revenues, continue to be the largest player, and the only profitable player amongst this ecosystem. There are no listed peers for us. We are a unique opportunity. As I said, we are an index to the e-commerce. So if you look at the e-commerce enablement space, the e-commerce enablement SaaS space, there are no listed peers for us. But amongst the private players that we compete with, we are a fairly dominant player and the only profitable player in the ecosystem.
Okay, and your international business is still very small. I think it contributes about what 4% to the overall revenues. Are you looking to build that up? Do you have the levers to scale that up as well? Will that be the intention?
Yes, so international expansion is one of our key strategies. Besides the transaction, customer, and the new products growth that I mentioned, adding new geographies or going deeper within the current geographies is important for us. We are present in 6 countries outside of India, and the idea in the short to medium term is to go deeper in those geographies. So our focus is Southeast Asia and Middle East, and it's a very logical extension for us because the fundamental structure of the market, e-commerce market in these geographies is very similar to India, that there are many marketplaces, many logistics players, and Unicommerce thrives in an ecosystem where there is complexity. Because when there is complexity, brands need something to simplify that complexity for them, which is what we've seen in India, and we want to replicate that in the international markets. Having said that, India will be a very core part of our strategy. India will be a dominant contributor to overall growth as well as our revenues. International is one of the strategies, but India will continue to be a very, very critical component of our growth going forward as well.
Okay. And lastly, I just wanted to understand from you, Kapil, on the bottom line, you have actually displayed strong growth going forward, going behind last 3 years consecutively. But what is the sustainable growth rate that we can expect from you? And, where do the profits get added from? Would you have to add more clients? Because once you have a client, what is the kind of possibility that you have? Do you offer more products to them, or do you widen your client base? We need to understand, where does the profit margin and the bottom line, scale up from here, and how?
Sure, sure. So given that we charge per transaction, a significant portion of our growth comes from our existing customers itself. As an example, there is a very important metric in SaaS called NRR, Net Revenue Retention Rate, which means that the cohort of customers that paid us 100 rupees last year, how much has that increased? As a business, we have consistently demonstrated 100% plus NRR year on year. As of FY24, our NRR was 108%, which meant that our existing customers that gave us 100 rupees last year gave us 108 rupees the subsequent years. So there is an inherent growth built in our business model that as the transactions of our existing customers grow, our revenue will continue to grow, even if we do not acquire any new customers. So that's why we are comfortably placed where our growth will come not only from existing customers, we'll continue to add new customers and continue to add new products as well. New products is a fairly new addition for us. We've just launched Uniship and Unireco, 2 of our new products. For the last many years, for a decade or so, we continue to incrementally enhance our existing products itself. And in terms of the profitability, given that the business has strong operating leverage, as you rightly pointed out, we have demonstrated an expansion in profitability. We will continue to grow consistently in our revenues and show even better growth in our profitability, given the operating leverage in the business.
Thank you so much, Kapil, for sharing all your views and insights with all our viewers about the company, the vision, the way the company strategizes going forward from here. All the very best for this entire IPO and the upcoming listing as well. And we'll hope to catch you soon after your listing too, to help all our viewers get better understanding on the key numbers, which you'll be able to speak much better after the listing. Thank you so much.
It was a pleasure talking to you. Thank you so much.
Thank you. With that, viewers, we wrap up this very special conversation with Unicommerce eSolutions IPO. And of course, we'll continue to get you all the insights from the world of IPOs, because it's raining IPOs right now, and you should be knowing what exactly are the opportunities that are opening up for you. Stay tuned with us on Business Today Television. There's a lot more that's lined up for you. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is a special edition where our focus is going to be on the primary market space. First prize, 4,194 crore rupees IPO has opened for subscription today. In fact, this is the